Hello, everyone, and welcome to today's Dynamics 365 Tech Talk. Today's topic is planning and configuring your chart of accounts. This is part one, main accounts. My name is Peggy, and I'll be your moderator today. We're broadcasting this session through Teams live events, and the audio can be heard through your device speakers. This session is being recorded on behalf of the Microsoft Corporation. When you join this event, your name, email address, and/or phone number may be viewable by other session participants in the attendee list. By joining, you're agreeing to this experience. The recording will be available on the Tech Talks Community Dynamics page within 5 business days. If you have questions today for the presenters or need support, please use the Q&A panel located on the right side of your screen. Our presenters will be responding to your questions during today's presentation, and there will be time at the end. Thank you for your patience during these announcements. Presenting for us today from Microsoft, we have Rachel Proffitt, Senior Program Manager, and Eric Pegger, Senior Program Manager. Rachel, over to you.
Thanks, Peggy, and thank you everyone for joining us this morning. Good morning, good afternoon, wherever you might be joining from. I'm super excited for this new series where we're really going to be focusing in on all things related to setting up and planning and configuring your chart of accounts. And in part one today, we're really going to be focusing in on main accounts. And I hope that you'll join us for the rest of our series, which will be happening over the next 3 weeks. Again, for those of you who don't know who I am, my name is Rachel Proffitt. I am a Senior Fast Track Solution Architect based out of Denver. I invite you to connect with me on Twitter, follow me on LinkedIn, check out my new YouTube channel at Dynamics 365 Unboxed or my blog at dynamics365lady.com. Also joining us today, we've got Eric. Eric, do you want to do a quick introduction?
Yes, thanks, Rachel. My name is Eric Pegors, and I'm a Fast Track Solution or Senior Fast Track Solution Architect on the Americas team, and my contact info is on the slide.
Awesome. So in today's Tech Talk, we're really going to be focusing in on 4 key objectives. We're going to start by introducing some terminology. If you're new to Dynamics 365, we have some terms and things that we use in Dynamics 365 Finance that may be a little unusual compared to other systems. And then we're going to describe a number of recommended practices for configuring your main accounts. We're also going to discuss and demonstrate how to create legal entity overrides and dive into the process and best practices around main account categories. Some things that won't be covered in today's session are financial dimensions, account structures and advanced rules, calendars, and the ledger. All of these topics will be covered in the future parts of our Tech Talk, so we encourage you to get registered for those and join us in the upcoming weeks if those are topics that you want to learn more about. So with that, we're going to just dive right in and start off with some information and some terminology. So starting with the chart of accounts, by definition, this is a list of main accounts that is not legal entity specific. I like to think of it as a wrapper or a container for the list of main accounts. And then each legal entity can be linked to a single or one chart of accounts in the ledger form. Next term that I want to talk about are main accounts. Main accounts are really the core of the chart. In some systems, this may be referred to as the natural account. These accounts are what we use to track the detailed transactions, whether they be assets, liabilities, expenses, and so on. Financial dimensions are another interesting term in Dynamics 365. Some other systems may refer to these as segments, but you can think of the dimensions as a way to break down your accounts by an additional attribute that further describes a transaction. Common examples include departments, cost centers, or profit centers, and business units. In some cases, you might hear the word segment used with Dynamics 365. And it's just important to remember that a segment could be a financial dimension, or it could be a main account. Now, the next term is a ledger account. And ledger account is a term that is specific to Dynamics 365 Finance that describes the specific combination of main accounts and financial dimensions. For example, I have an account number 1000-20-30, which represents Bake X for 1000. The Department of Finance represents the 20, and brand X represents the 30 as an example. Now, ledger, when I just use the word ledger, is another term that is specific to Dynamics 365. Each legal entity has one ledger, and it's actually a page in the system where you link that legal entity to the specific chart of accounts, the account structures, currencies, and other settings that fundamentally control the behavior of the ledger in that particular legal entity. So moving on, some more terms that I want to talk about. The first one here is general ledger. When we use the term general ledger, we could be referring to the module in Dynamics 365 Finance, or we could be referring to the generic term that represents the register of all debits and credits that are recorded in a financial system. Dynamics 365 includes a number of subledgers as well. And since Dynamics 365 is a double entry accounting system, all entries must balance to zero, and all transactions, such as sales orders, purchase orders, and production orders as examples, are posted into the subledgers of the system. The subledgers contain more detail about those transactions, while the individual transactions are often summarized when we post them into the general ledger. A journal is a term in Dynamics 365 that has a very broad meaning and is used in many different places. You can think of the journal as a wrapper for a group of transactions. In some other systems, this might be referred to as a batch. However, the term batch has a different meaning in Dynamics 365, and that's partially why we don't use that term. The last term that I want to review with you that we'll be using throughout this whole series is the voucher. This is another term that can have different meanings in other systems, but in Dynamics 365 Finance, a voucher simply represents a unique number. And it's usually assigned automatically with a number sequence following a specific format based on the type of transaction that's being posted. And that automatic number, that unique number, is assigned to each transaction. Again, since Dynamics 365 is a double entry accounting system, this means that each transaction must balance. In other words, each voucher must have an equal amount of debits and credits. The voucher number that's assigned to the transaction is the unique identifier when you're viewing the details of that transaction in the general ledger. So now I'm going to hand it over to Eric, who's going to dive into some details about the subledger. Eric, over to you.
Thanks, Rachel. Let's take a closer look at the concept of the subledger compared to the general ledger. The general ledger contains a set of master accounts. In Dynamics 365, we refer to these as main accounts, while the subledger contains a set of intermediary accounts. These accounts are different in each subledger, but as an example, the accounts receivable subledger stores customer account numbers, while the inventory subledger stores item numbers. When we think about the nature of the transactions that are posted into each, the general ledger is a single entry point that includes all financial transactions across the system. while there are many subledgers that make up a subset of transactions. Each of the subledgers links to the general ledger. In Dynamics 365, the legacy link is by voucher or voucher and date, and newer designs use a link that is more specific. This linking is the reason we recommend keeping vouchers small and avoiding what are known as one voucher scenarios. Lastly, when we think about the volume of transactions, there is a distinct difference between the number of transactions in the general ledger as compared to the subledger. The general ledger transactions are typically summarized and have a lower volume of transactions, while the subledgers have a large volume of detail as they carry each of the individual transactions of the subledger. This is why we should avoid duplicating subledger data into the general ledger. For example, the accounts receivable data already contains the customer account number and can be used for detailed reporting related to accounts receivable. Now let's switch gears to talk a little bit more about financial dimensions. We have broken down the concepts into 3 pillars for types, behavior, and limitations. Let's start by discussing the types of dimensions. There are 3 key types. First is custom dimensions. These dimensions offer full flexibility of the values and behavior because you define exactly what they mean. Next is the entity-backed dimensions. These are dimensions that get their list of values from another source, such as an existing table in the system. Examples of this include things like customers, vendors, items, and projects. There are about 30 entity-backed dimensions available out of the box, and a developer can create custom extensions to create new entity-backed dimensions as needed. The third and final type of financial dimensions are organization units. These are a special type of entity-backed dimension that have additional functionality available in the organization administration and organization hierarchies. Examples of organization units include cost centers, business units, and departments. Now let's talk about the behavior of dimensions. It is important to note that all custom dimensions and some entity-backed dimensions are shared across legal entities. An example of a shared value is a worker, while an item is legal entity specific, for example. When a dimension has legal entity specific values, you can create legal entity overrides to control the behavior of a dimension value in each legal entity. One thing to remember is that dimension values that are from different legal entities are distinct or not exactly the same, even if they look the same. For example, if customer group is a financial dimension and customer group ABC exists in multiple legal entities, each of the values is unique to its legal entity, even though they share the ABC value. The simple explanation of why this is true is because each of them is a different record in the cus group table with a different rec ID value. It is also important to note that a financial dimension has to be activated before you can start using the dimension. This does require the system to be in maintenance mode because it makes schema changes to the database during the activation. You can also create translations for financial dimensions. This will allow you to support financial reporting in multiple languages. The final point for the behavior is related to the ability to delete dimensions. Because of the unique architecture of financial dimensions and dimension values cannot be deleted after they have been selected in a journal or transaction. It is important that dimensions are not deleted through the back end, such as the database or with X++ code, as this can cause downstream data inconsistencies. Some alternatives to deleting include renaming, where you could name it with a value that would be at the end of the list, so it's not as visible, or suspending the dimension, which would allow it to not be, would mean it could not be used in transactions. Finally, let's discuss some of the limitations of financial dimensions. Financial dimensions should not be used to model operational or business requirements. For example, creating a project dimension in place of implementing the project's module. This often leads to expectations of the financial dimensions behavior that is not intended or supported. Where projects module, for example, could meet the business requirements, where the projects module, for example, could meet the business requirements. It is also important to note that all of the tax functionality on main accounts is legal entity specific. So you will always need to create a legal entity override to configure tax information, even if you only have one legal entity. While financial dimensions are available in many reports, including financial reporting reports, they are not available in all reports throughout the system. Based on your business requirements and reporting needs, you may need to extend reports to allow filtering by dimensions or to display dimension data in reports. Since your dimensions are unique to your implementation, there is not an easy way to add dimensions to all your reports automatically. This means it is critical to evaluate where the dimensions are needed in your reporting. Lastly, it is important to note that inter-unit accounting is only designed to address the accounting entries. If you have business requirements across the business units or across another dimension that you're using for inter-unit accounting, the operational aspect of those transactions is not affected by the inter-unit accounting process. Now I'm hopeful that you have a good understanding of what a subledger and a financial dimension is. So next, it is important to understand when you should use a financial dimension versus when you should use a subledger. If your business requirements to report on a value and the ability, if your business requirement requires to report on a value and the ability to summarize a value, then a financial dimension can likely meet your requirements. Conversely, if you have operational requirements or need individual transaction detail beyond the dates and dollars that are posted into the general ledger, then a subledger should be used. It is not generally recommended to customize the financial dimensions or general ledger to copy or track additional details in the general ledger as a substitute for using a subledger that has the same functionality available. For example, a customization to put the sales order number directly in the general ledger table is no better than having a financial dimension for the sales order number, and both of these options are not recommended. Back to you, Rachel.
Thanks, Eric. So now we're going to switch gears a little bit and kind of dive into the main accounts themselves and configuration related to those. When thinking about your main accounts, it's important to have a good strategy in place before you start clicking the new button and creating the accounts. There are several factors that you'll want to consider. First is the length of the account numbers. Generally, 3 digits is too few and does not allow for much growth, while 7 characters is likely too many and may inhibit the usability of the system. Typically, 4 to 6 digits is recommended and allows enough room for growth and creates a balance for the usability. Next is the format of the account numbers. You will want to define a good format for your chart of accounts. Generally, we recommend that you stick to numbers. While introducing alpha characters allows for more space, this can create confusion and usability problems for your users. If letters will be used, ensure you have considered the usability, reporting, and training for your users carefully. We also recommend that you use a mask to ensure that all account numbers are the same length. For example, you don't want to create some 4-digit account numbers and some 5-digit account numbers, and try to build meaning into the account numbers with the length or letters, for example. This is typically an indication that a financial dimension can help to meet the requirements, and you should consider if a fixed financial dimension can be used to meet those requirements. Finally, when thinking about the strategy for your main accounts, you will want good structure to the accounts. For example, you might want to consider using a standard such as the Harvard standard, where the accounts that begin with 1 represent assets, 2 represent liabilities, 3 are equities, 4s are revenue, 5 are cost of goods sold, 6 are expenses, and so on. Even if you don't use a general standard, we recommend that you document your structure and rules and consider creating main account templates for each account type or range that you have assigned in your structure. Next, it's important to consider the basic configuration strategies for your main accounts. First is the sharing of your main accounts. We generally recommend that you always share your main accounts when possible. Make sure to document and understand the business requirements and reasons for not sharing a main account. It's generally always going to be easier to manage the exceptions and share where possible. When thinking about managing exceptions, you'll want to use the legal entity overrides. Remember that you can disable accounts that are not needed in specific legal entities. If you have an account that is only needed in one legal entity, you can suspend the account and then use legal entity overrides to enable the account in the legal entities where it is needed. Also consider the use of additional consolidation accounts. It's very common that businesses need an alternative numbering or naming of accounts for regulatory requirements. In this case, you can often use an additional consolidation account to define a different number and account name for each main account. Finally, it's critical to have a strong governance process in place for managing and maintaining your chart of accounts. And remember that your governance process should include the downstream posting profiles and parameters that are affected by changes to your chart. We recommend that you configure and test security roles to limit the number of users who can maintain your main accounts, financial dimensions, posting profiles, and so on. We also recommend that you use main account templates to help create consistency and to improve the usability and ease at which you can create new accounts. You may also want to consider configuring posting validation on your accounts to prevent system accounts from having transaction posted into those accounts that are outside of the scope of the expected transaction types in that account. The final governance tip we have for you is to consider using database logging to track the changes that are made to main accounts, posting profiles, and critical parameters. In the event that an unexpected change happens, you can use the log as an audit trail to determine who made the changes, when the change was made, and what the previous value was in the event you need to revert the configuration back to the original value. It's always important to have a good cleanup process in place when you enable database logging, and we do not recommend using database logging for high volume transaction tables. Now let's switch gears a little bit and discuss the details about the chart of accounts in Dynamics 365 Finance. Each chart of accounts is a distinct list of main accounts. Every implementation will always have at least one chart of accounts defined. The chart of accounts page is not legal entity specific, meaning that you can open the page from any legal entity in the system and you will see each chart of accounts and all of the main accounts within it. Each legal entity can have one chart of accounts. This is configured on the ledger form, and this is how you tell the system which chart should be used for each legal entity. It is important to note that you cannot change the chart of accounts after transactions exist. While you can create new main accounts or make changes to the settings on existing main accounts, the chart itself is fixed after you post your first transaction. For this reason, we strongly recommend planning, testing, and validating your chart of accounts design carefully before going live. You can add new main accounts to the existing chart of accounts and disable the accounts or make changes to the accounts after transactions exist. This includes making legal entity overrides on a main account if you need the behavior to be different for one or more legal entities. Many legal entities can have the same chart of accounts. If you want to share the chart, you will simply assign the same chart of accounts in the ledger form for each of your legal entities. In this short demonstration, you'll see how to create a new chart of accounts, main accounts, and then select the chart of accounts in the ledger pane. You'll start by going to General Ledger, Chart of Accounts, Accounts, and then Chart of Accounts. Next, we click New to create a new chart. For this example, we are naming it Demo. And entering a mask for 5 digits by entering 5 pound signs. Then we click New to create a new main account. For this example, we are creating a demo bank account, setting the account type to asset and selecting the account category of cash. Now, we'll close this window down and we will open up the ledger form after we're done creating the main account. For this example, I switched to the demo company and then we select the demo chart of accounts that we just created. You'll also need to select a calendar and a currency in the ledger form. So once I navigate to the ledger form, you'll see here that I select the chart of accounts, the calendar, and the currency. For this example, we are selecting the fiscal calendar and USD for the currency. And when you're finished, you can just close down the forms. So there I select fiscal and I select the currency. We'll be coming back to this ledger form several times throughout the series as we configure different aspects that are required for the ledger. So now I'm going to hand it back over to Eric, who's going to dive into the legal entity overrides.
Thank you, Rachel. Now that we've talked about main accounts, let's dig into legal entity overrides. There are several settings that you can specify on a legal entity override. Some of the settings are also available on the main account directly, meaning they are global, or they apply to all the legal entities where that chart of accounts is linked to the ledger. These settings include the following. Suspend. Selecting this setting disables the account, meaning that no transactions can be posted into the account. Active from and to dates, which is another way to control when transactions can be posted into the account. This is based on the posting date that is specified on the transaction, not the system date or current date. In other words, if you set an account to have an active end date of the last day of the year, you can still post transactions into that year, assuming that the period is open, but not into the next year. Exchange rate type is used to define a specific exchange rate type that is used for the main account for a foreign currency revaluation. This overrides the exchange rate type that is set up on the ledger page, but only for a foreign currency revaluation. Reporting currency exchange rate type is used to define the exchange rate type that is used on the reporting currency column for the account. Now, in addition to the settings that you can set globally, you can also set some settings on each legal entity. The following settings can only be defined on each legal entity, and like we said earlier, this is true even if you have only one legal entity in your environment. First is the default dimensions. This is one of the most common settings to override on a legal entity. This can be used to define a default for documents, to define a default when you create journal entries, and you can also make financial dimensions fixed, which forces any transaction, including source documents like purchase orders, for example, to use the specified dimension. We will discuss this in a bit more detail later. Next are the sales tax settings. Since the tax behavior in the system is controlled by the country that is selected on the legal entity, the tax configuration must be specified for each legal entity. Again, even if you only have one legal entity, this is true. The next two settings go together. First, you must select the allocation checkbox, which will enable the allocation terms button, where you can define the behavior of the allocation. These allocations are posted automatically when a transaction is posted in the main account and can be used to distribute an amount across several dimension values, for example. Finally is the cash flow forecast settings. This is also a button on the legal entity override that opens another page where you can configure the behavior for cash flow forecasting in the system for the specified main account and legal entity combination. So now let's take a look at how to create legal entity overrides in Dynamics 365 Finance. In this example, I'm going to suspend a bank account in one legal entity and add default dimensions to a bank account in another legal entity. So you open the chart of accounts, select your chart of accounts, select the main account, click on the Legal Entity Overrides Fast tab and click Add. Select the legal entity that you wish to add and click Add again. From there, you can configure the settings like suspend the value. In the Fast tab, click Add again for another legal entity. When you have that legal entity, choose Add. Click on the default dimensions. Select your dimension and your dimension value. And configure additional options using the buttons as needed. Now, Rachel's going to talk about main account categories.
Great, thanks, Eric. So taking a closer look at main account categories, you may have noticed in one of the earlier demonstrations that we selected a main account category when I added a main account. So I want to talk a little bit more about these. Main account categories are used to group similar main accounts together and primarily serve a reporting function. You can also select a main account type to restrict the categories that can be selected. With Dynamics 365 Finance, the main account categories are used in the Power BI reports and financial reporting reports that are provided out of the box. When you use main account categories, there are a few best practices to keep in mind. First, we recommend that you use the existing main account categories. A good list of categories is provided out of the box, and the out of the box reporting is linked tightly with these categories. We do not recommend that you change the meaning by updating the name or description of the main account categories. This can cause unexpected behavior in the out of the box reports. Next, it is important to note that if you add new categories or edit the meaning of existing categories, you'll need to update the reports that are provided out of the box to reflect the changes and additions you have made. Lastly, it's important to note that if you change the name of an account category, or if you add new account categories, the out-of-the-box Power BI reports will no longer work, or the data will be inaccurate. You will need to update the design of your Power BI dashboards to reflect the changes that you make to the account categories. Now I'm going to hand it back over to Eric, who's going to talk through the do's and don'ts for configuring your main accounts.
Thank you, Rachel. Let's dig right into these tips for designing your chart of accounts. The first one is design with flexibility. Don't define segments that are easily derived from another segment. As an example would be to define both a location segment and a regional divisions dimension, even if the regional division is defined as a combination of the locations. If you created the regional division dimension, then you are basically defining the same thing twice, and it also makes your chart of accounts less flexible going forward because you could change the locations in a regional division. Next is to keep the design simple. Only create dimensions that you will need and use currently. Account combinations expand exponentially for each new segment you add. Take, for example, a main account with 2 dimensions, and each dimension has 5 values. This results in 25 or 5 times 5 account combinations or ledger accounts for that one main account. If you add a third segment and allow 5 values, you can now have 5 times 5 times 5 or 125 combinations for that one main account. These are simple examples, and the numbers will get large very quickly if you have 10 or 100 values for a dimension. This all makes it harder for invoices to be coded correctly, requiring more data entry, more rules, and more complex report definitions. Keeping things simple will save a lot of time down the road. Next is to define a singular meaning for segments. Try to make each dimension value always have the same meaning, regardless of the other segments around it. If the segment value has a different meaning based on how it is joined, you are really treating your chart of accounts as if there was only one large segment. In other words, the individual dimensions mean nothing, and you must look at the full combination to understand the meaning. This defeats the purpose of having a multi-dimensional chart of accounts in the first place and makes things very confusing. To the same point, do not use the same dimensions or segment in your chart of accounts to represent 2 types of data. For example, a dimension called purpose that is used on revenue accounts to represent a cost center and on expense accounts as a list of projects. The same list of dimension values would include both cost centers and projects, and that is not recommended. Next is to use consistent numbering. We've talked about this already, but keep each dimension value within one dimension a consistent length. You can manage this by using a mask on the financial dimension, similar to how we did on the main account. In fact, a main account is just a special dimension in that sense. Doing this can be helpful for sorting and defining ranges. This is often overlooked, and it is easy to start a new segment with the first value of 1. If your segment is defined as 3 digits, then the first value should be 100, and values 0 to 99 should not be used, or they should include a leading 0. Otherwise, only use values 100 to 999. Also consider if you want to allow blank values in your chart, or if you want to use a value of the appropriate number of zeros, for example, 000, to represent no dimension value. Carefully consider alphanumeric dimension values is another one from main account. Although we support alphanumeric values, meaning alphabetic number or alphabetic characters and numeric digits in the dimension value, carefully consider if this makes sense. Typically, using just numbers is recommended. They can be difficult to sort and inconsistent in length due to variable width of alphabetic characters. In some cases, it can be difficult to create ranges with alphanumeric dimension values. One advantage to using alphanumeric values is that they can be easy to identify the meaning when you are reviewing transactions. But the description is generally available on the inquiry forms and reports throughout the system, making this a moot point. Leave room for growth. Ensure adequate dimension length to allow for future growth, i.e. 2 digits would allow 100 values, or only 90 if you don't use 0 through 9. And 3 digits will allow 1,000 or 900 values. Also, ensure you can expand without exceeding predefined ranges. Use ranges where possible. Not only should dimension values have a meaning, but also its location within a certain range can give it more meaning. This is a good way to get a lot of information and create structure within your chart of accounts. For example, you could define all revenue segment values as numbers between 40,000 and 40,999. Another example would be to define all locations starting with a 1 as belonging to a certain region, such as New York State, and then use 100 for Buffalo, 101 for New York City, 103 for Syracuse, etc. All values in the 100 to 199 range belong to New York State. And note, this is better than trying to create a 1 for a division in a new segment, because using this in the same segment, you can now sort and identify both through a single value and entry. Next is to align dimensions and management structures. It is recommended to define a financial dimension that corresponds directly to your management structure and permissions. This allows you to easily share and control who has access to the different sections of your general ledger based on their responsibility. If your management structure is organized by function, by location, by product line, or line of business, then you will want a corresponding segment to denote each item within. Implement strong controls. It is strongly recommended to have as few people as possible responsible for maintaining the chart of accounts. Even in a very large organization, if you can assign a single person to manage this, you will be better off. This person will often manage changes for the financial reports, and if not, should communicate account changes to that function. And be sure to create a document that defines the structure, purpose, ranges, future use, and conventions. Finally, review and revise regularly. Remember that even a perfectly defined chart of accounts will break down over time as your business grows and changes. So it is a good idea to review the design and structure every year, disable old accounts, and keep things organized. You should always review this and take the time to update the chart of accounts if you are implementing Dynamics 365 Finance for the first time or upgrading from a previous version. Now let's review some quick do's and don'ts for main accounts. Do use a main account mask. This ensures consistent length. Do use the standard main account categories. Do share the chart of accounts when possible. Do manage exceptions with legal entity overrides. And do use main account templates to create consistency. Now for the don'ts. Don't make main account numbers too short or too long. Don't make main account numbers that are different lengths. Don't use alphabetic characters in main account numbers. Don't change the meaning of the standard main account categories. And don't give excessive security for maintaining the chart of accounts. And now back to Rachel.
Thanks, Eric. So we've put together a checklist and a number of resources to help you on your journey getting your chart of accounts planned and configured. The checklist that we've put together is all up for everything that you need to do with your chart of accounts, not just the main accounts. So this checklist will be kind of coming back to it in each of the different parts. And you can see that we've put hyperlinks in our checklist. The PowerPoint presentation will be available as a PDF that you can download with the recording of this presentation that will be available on that TechTalk Dynamics community page. So we encourage you to take this checklist and download it and use it to help you with your configuration process. It continues on our next slide here, so you can see it goes all the way to the very last step here, which is configuring the ledger. So all of the other configurations are kind of the prereqs, if you will. Some of them are optional, some of them are mandatory, but if you do them in this sequence, it'll kind of reduce the amount of back and forth that you might need to do and get you to that fully configured chart of accounts and ledger. We've also pulled together some resources for you. So we've got links that will take you to the general ledger docs. We recently did some reorganization and there's some additional reorganization happening to the general ledger section in the docs website to make it a little bit easier to find content and those pages. We've also got a link here to the Finance Learning Catalog. There's a lot of great e-learning that you can take that will dive into and get you some more hands-on experience with a lot of these setups and configurations that we've talked about today, you know, to help supplement your learning. So with that, we are going to switch over to questions, and we do have a number of questions, some of which we've already answered and a couple that we have not yet. So we are going to kind of go through those. So the first question was, is it possible to have one chart of accounts, but still address local GAAP requirements to maintain particular account structures? I.e., I may have one account in my chart of accounts that needs to appear with a different account number to meet the local GAAP requirement, depending on the legal entity it is in. This is actually a great question. I'll go ahead and publish that so you guys can read it. And it's kind of a complicated question. So you can technically still use a global chart of accounts, yes. And what we recommend in this case, when you've got these like local statutory reporting requirements, it's common in Mexico, France, Germany, There are other countries as well that have very specific requirements and numbering and naming schemes. What we typically recommend in this case is that you try to use the global chart of accounts and you use additional consolidation accounts. So you create a consolidation group for that country or that statutory reporting requirement, and you would do that mapping. So you could leave the rest of the account numbers and descriptions the same if they're not needed, and in your additional consolidation accounts, you could actually change both the account number and the description of the main account. This approach does require that you set up a consolidation company and perform an actual consolidation to do that transformation and get your totals. So you'll need to consider that carefully. Because you're not going to get the values in that specific format until you run that consolidation, and most organizations only do that monthly. But that is our kind of preferred recommended approach. This is actually a topic that's come up pretty recently a number of times, and we are currently working on a new docs article that's going to detail out those steps and kind of some of the do's and don'ts to that specific scenario. So keep an eye out for that, and I'll likely post about it on my YouTube and my LinkedIn when we get that new docs article created. So hopefully that answers the question. And Eric, if you've got anything else you want to add.
Yeah, I just have one other thing, is that just in case you're when Rachel mentioned consolidation, you got worried about the performance of it. I wanted to mention that there's a new consolidation performance feature that came out in 10.0.20 and was backported to 18 and 19 that may help.
Yeah, great tip. And remember, that is a feature management feature, so you do have to go enable that feature to start taking advantage of that. All right, so the next question we have, any suggestions for balance sheet by business unit with intracompany accounting? Great question. And I'm actually going to deflect this one. Sorry. This is actually one of the topics we're going to dive into in part 2 in our financial dimensions session. So I encourage you, that's happening. We've got one tomorrow in US time zone afternoon and Friday morning in the morning, the same time. So come to our part 2 financial dimensions session to get more information on that. We also just had another one come in. Can you please elaborate financial dimension more? Again, we're not covering financial dimensions in detail in part 1 here. So please come to part 2, and we're going to really dive deep into everything you never wanted to know about financial dimensions. That's happening tomorrow and Friday. All right, so the next question we have, what is the best practice to reflect a more level category structure? Example given, an account could be part of balance sheet, assets, receivables, other receivables, impaired receivable. I guess maybe I don't really understand the question. So if I don't know, Eric, if you've got some insight here, if this makes sense to you. If I understand this, like you want to tag a single account as all of these things, as a balance sheet, assets, receivables, other receivables, impaired receivable. So categories out of the box, you can only select one main account category. There is a concept of account type where you can indicate if it's an asset. There is an option in that drop-down box for balance sheet and asset, liabilities, equities. I usually recommend using the asset, liabilities, equities and not the balance sheet option. And obviously, if it's an asset, it is part of your balance sheet. So if you want to see the whole balance sheet, you could filter on assets, liabilities, and equities, like list them out with commas. But I'm not fully following like exactly what the question is here. So if you want to try to post again, or Eric, if you want to give a shot and see if you can answer.
Yeah, I'm not 100% sure either. So I think it's Giovanni, if you would want to ask the question. It might be related to maybe using dimensions to sort of get more out of that main account, but that's a guess by me as well. So.
Yep. So a comment came in, you advise against adding main account categories, but the standard codifications correspond to US GAAP, which is not usable for a large number of countries like France and Germany. Great feedback. I definitely encourage you to put your feedback into like the ideas site, and we can help drive this feedback as well. The key here with your main account categories is you can absolutely change your main account categories. Just don't expect the reports to automatically update. So if you're going to make a change to your main account categories, then know that you need to build time into your project and plan in your project to update the Power BI dashboards and reports and your financial reporter reports. So I guess it's not a hard recommendation. I would say avoid it when possible. And keep in mind that if you do change it, you're going to also need to account for updating those reports. All right, so this is a long one. I'm trying to read it here. Consolidation account and alternative consolidation account, when mapped behind main account, how to use them? Will it show in GL reports, financial reports? Will it only be useful if you consolidate? In D365, can I use it to reflect group accounts of the company if their group is using SAP, not in D365? I think I kind of understand the question here. So kind of going back to that whole consolidation account. So these additional consolidation accounts are in a table. You can absolutely report on them. You would likely need to like create your own entity or view that joins those two tables together. And you'd likely want to do that in BYOD or with Data Lake. From that standpoint, balances would not be visible in, like, so when you run a trial balance, for example, you wouldn't see balances based on that consolidation account unless you actually run the consolidation. So like it would take some extra work, to do that. And I wouldn't recommend trying to like write a report that basically replaces a consolidation. So in terms of the group accounts, you could absolutely use the additional consolidation accounts to map, what our account numbers mean to another financial system and grouping. And there's not a limit to how many consolidation groups you can create and additional consolidation accounts. So if you need to do it multiple different ways and you are using a global chart, you could have a global chart that's shared across all the legal entities and just map that to the requirements for your SAP system. You could map that to the requirements for France. You could map it to the requirements for Germany, and so on. Yeah.
Okay, that's the consolidation one, right, Rachel?
Yeah, that was the big long consolidation one. Another question on the main account categories. So obviously a lot of questions here around main account categories. So when possible, we do strongly recommend you try to use those out of the box main account categories, right? They are hard coded into the Power BI reports, KPI tiles, and so on. And so if you rename them, the KPI tiles will basically have no data because it can't find the old value. So you'd have to go and update that KPI tile or Power BI report to kind of say what the new value is. If you change the meaning of one of your main account categories, that could also make, like, what used to be an asset, is now a liability. And so it might be in the wrong section of the report if you change the meaning. So I guess, again, avoid it if you can, but know that if you do change them, then the out-of-the-box reporting is going to need to be updated, and you need to account for time in your project to go make those changes. So, someone will have to go develop and update those Power BI reports or develop new ones and so on.
Yep, and I have replied to a few of these as well, Rachel, and took them off the list, so.
Yeah.
Yeah, I'll reply to Giovanni. He put a private thing on his original question about the a more level category structure. So
yeah, we had a kind of comment come in about the oh, it went away. Did you publish it?
That was the one from Giovanni.
Okay. Got it. I mean, it was back to governance, right? Our recommendation is you should minimize the number of people responsible for editing and maintaining your chart and posting profiles. To the comment and the point that's here is never only have one person responsible for something. I would say that's generally true across your entire system. You should always, always, always have at least one backup for all of the different roles throughout your entire organization, not just this. But right, it's important that you have a gatekeeper, right, and that you have clearly defined processes and procedures, and it's not a free-for-all. I've seen in organizations that have tried to go to a global chart, and they've got one person in every single legal entity that's allowed to go in and make changes to the chart. And 3 months in, their global chart is no longer a global chart, and they're making changes that affect the other legal entities, and they're not talking to each other about it. That's what you really want to avoid. Like, especially when you're going to global, you need to appoint someone and have a process that you go through to make changes to your chart. It shouldn't just be a free-for-all. And obviously it has a lot of effects on downstream processes. So whoever those people are in your organization should have a good understanding of what those downstream processes are and what that means. If I make a change to my chart, do I now need to go update my posting profiles, and what other documentation do I need to update? What do I need to keep for my auditors so that they know? Do I need to change my reports now that I changed my chart? Like, all of these things need to be considered, and it's not as simple as just clicking the new button in the main account page.
Jessica asked a question about legal entity overrides, and I think that the gist of the question was, it's sort of unfortunate that if I want to do one legal entity different than the others, I might have to enter an override for all of my legal entities except that one, because I don't think that you can set the global setting and then alter it with a legal entity override. So I think that is a.
I'm not sure if there's an ideas out on the ideas website, but I think this is another bit of great feedback. We can certainly help drive that to the product team, but I would certainly encourage you, if this is not already on the ideas website, get it out there, and then everyone goes stuff the ballot box.
Agreed. It would definitely be a convenience or a time saver to have some more flexibility there. And I think the last question on the board here was about the main account categories, and I think we got that feedback as well, to especially outside of US GAAP, to have some better guidance on what is what to do in those scenarios, because they're real common scenarios.
All right. and last question, and we're going to wrap it up. We are a few minutes over. Thank you everyone for staying. But the last question is, will this material be available on TechTalk homepage? Yes. Peggy, it usually takes a few days, but the recording and the PowerPoint slides in a PDF format will be made available.
That is correct. You're absolutely correct about that. And I'm going to go ahead and post that link there again. So should we wrap up this session?
Yep.
All right. Well, if the attendees could have a look in the chat window, I've gone ahead and posted that survey link again, just in case you didn't catch it the first time. Our presenters would really love your feedback on today's session, and they'd like to hear what you would like to see in future events. So please take a moment and fill that out. And as we just discussed, the recording will be available along with a PDF of the deck on the Tech Talks Community Dynamics page within 5 business days, and all registrants will receive an email notification when it's available. So big thank you to our audience and our presenters. Have a great day or evening wherever you are.